Hey guys, welcome back to another market update. Today is October 3rd. We're reviewing the stats of September 2025. We have a really interesting market for all you real estate people out there. There's so much going on. There's a policy rate reduction, increased unemployment, easing prices, better borrowing costs. There seems to be a lot of opportunity out there. Very quickly, very high level, before we dive into it, how are we feeling about the market? Jen, let's hear it from you first.
Well, I think you used the best word. I think there is a lot of opportunity in this market. And I think there's a lot of differing opinions between buyers and sellers.
Patti, summary, what's going on out there?
Uh, First off, it depends on what part of the market you're talking about, because there are certain segments that are very, very well inventoried and others that have very little inventory. So that matters. And then secondly, just, from hindsight, I mean, I have a fair amount of years behind me. This feels like to me that there is a real desire on the part of buyers to buy, but because they hear from their families or the news that there's so much uncertainty in the world, they're afraid. And so what we're seeing is a lot of offers that are very, very low in comparison to what the asking price is. And it doesn't matter what you're asking. They just shoot for below whatever it is. So you can be correctly priced for today's market. The sale can have happened 3 days ago. That's a direct comparison. And now we're another $50,000 to $100,000 lower. And so it's not unusual that people are going to try to take advantage of that. It's not. But the sellers, for the most part, certainly ours, because we correctly price our listings, are holding firm. So guess what? It's a standoff. And eventually the buyers will decide they want to buy. The interest rates are trending in their favor. They're going to make a move. They're going to get bored with this. But right now it's a little tougher. And right now as sellers, people have to decide, am I priced correctly? Can someone show me exactly what it should sell for? We can, and, or within a certain amount of reason. And so listen, they're just going to have to sit tight. I mean, this week has been hilarious. Everything that came across my desk, I had so much paper across my desk that was going nowhere because the buyers are hearing about this great opportunity to slash and burn prices, but no one's selling, so it's not working. And that's what happens. They get tired of it, and then they start coming into reality. And yeah, that's basically what's going to happen. The market's already adjusted. It already has. Is it going to adjust more? That's hard to say.
Yeah,
but I don't think so, because a lot of people have a lot of staying power. So why would you sell if it's so, why would a seller sell right now if they couldn't get a reasonable price? And that's what I'm coaching my sellers. I don't think I'm the least likely to fudge any detail about your listing of anyone I know. I mean, I'm happy to tell the truth, and I do it sincerely. But some of the stuff that I've been seeing is utterly ridiculous.
I remember us saying that even when the market was taken off a few years ago, that the news is always a couple months behind what's actually happening on the ground and with the offers. And I think we're just starting to see that gap kind of widening. Like the news is still saying the market's falling. There's some adjustment still. But you're right. We're kind of seeing that now where sellers are waiting. When we get into some of the numbers here, so the Greater Vancouver report came out and says sales in the region totaled 1,875, so just under that 1,900 mark. It's up 1% compared to last September, but still 20% below the 10-year average. We briefly touched on it, Patti, when you were talking about buyer psychology there, but I just want to go back to that. So even with the prices lowering and cheaper financing, do you think the primary reason why buyers are holding off or putting in kind of these very soft offers is because they see further price drops? Is it job or economic conditions? Is it policy and government? Like, what do you think is that deciding factor that's making them go really low, even though you have a listing that's priced properly?
We are living in fairly uncertain times, for sure. Like, everybody's confused and scared and worried about job security, but everybody's still working that I know. And I think we have to keep that in mind. Like, we've had this kind of fear before, right? That was based on world events. I go back to 2008 and the crash in the States, right? We had absolute paralyzation in our market from September of 2008 till about January of 2009. And then everybody looked around and went, well, wait a minute. I still have money in my pocket. I don't have a subprime mortgage that's upside down. I'm still okay. And our market just took off. So while I think we have to be cautious and concerned about world events, they don't always apply directly to us. And so we have to also factor that into any decisions we make.
Awesome. Let's move over to inventory, because this tells a little bit of a different story here. There were 6,527 newly homes or new properties listed for sale. It represents a 6.2% increase compared to last year and 20% above the 10-year seasonal average for new listings. So the last time listings in a month were over that 6,000 point, we had to go back all the way to 2020. And it only breached that 6,000 mark for new listings 3 times since 2005. When we're talking about new listings, and then we'll get into total inventory, there's a segment of the market that this report doesn't actually touch on. And it's the quote unquote shadow inventory that developers are holding as kind of this hidden supply. So my question to you guys is, do you think the shadow inventory that developers are holding is going to really negatively impact the market? Like, are we going to see this massive wave of new condos coming to market, and how do we think that'll impact buyers, buyer mentality, and then our sellers?
I hope everybody does understand what that shadow inventory means. That means that these are units that are for sale, but they're not on MLS. And so this takes you to either go to a sales center or have your realtor introduce you to a sales center. And I know that my inbox is full of marketing from developers. It's full of marketing for townhomes and condos, basically. So how do I think this is going to affect the market? Well, I think it is going to affect the market. I think anytime we have more product on the market, and those numbers you're talking about, Adam, they suggest we have lower sales when we look at seasonal averages, and we have higher inventory when we look at seasonal averages. And anytime we have those two factors, we know that we're going to have some kind of downward pressure on pricing. But this also might indicate we should have more sales. So will the sales match this kind of downward pressure, or at least sideways pressure for pricing? I don't know. But I do think the shadow inventory will affect, and we do see some developers not continuing with their projects, which I think is really fascinating. Do you want to talk about that, Patti?
Yeah. Well, I was going to say, first off, Adam, shadow inventory is not something new. It exists at all times in our market.
That's very true.
Most of those developers have never. They put 3 on MLS, and the rest don't come. So that's always been a factor that we, can't really add into the pile. But Jen's right. 100% right. We're seeing a lot more aggressive marketing. Come to our center, come see our new product. They're starting to talk to us again, as opposed to they're trying to entice us again. Come on in and win a car. I don't know. Anyway, but that again is not that new. And Jen is right as well. There are so many developers that are no longer going to go ahead with the project. Or there's also in downtown Vancouver, there are several projects that will only be rented. They're not going to sell them.
Mm-hmm.
So that's how they're dealing with it,
Mm-hmm.
because they know there's still a fairly healthy rental market, and fine, we'll keep it ourselves. So that we've seen that as well. I think, yeah, we're in uncertain times, but if you want to buy or sell a home, you have to do it when it's right for you, and you have to turn
Mm-hmm.
off the noise, and you have to move forward with confidence that someone will help guide you. And we're here to do that.
Right on. When we look at total inventory on the market, there's 17,100 homes in all of Metro Vancouver. It's 14% increase compared to September 2024. It's 36% higher over the 10-year seasonal average. When we look at the inventory, the last time it was like consistently above the 15,000 mark was really 2008 to 2015. Like we've hit it a couple times this year, but it was really 2008 and 2015. It really went up and down and up and down. So with the active listings up 14% year over year and prices still trending down, do we finally have a true buyer's market in Vancouver?
It depends on what portion of the market you're talking about.
Elaborate.
If you look at detached homes, there aren't that many that are worth considering in terms of the price, right? So there may be product on the market, but it's incorrectly priced. And even that, again, there's not an oversupply at this point of single family homes. Condos and townhouses is a different story. And the interesting thing when I think about this is that, there's this idea, there's a couple of studies that were done that the millennials aren't buying, right? And that when they do, they will be the largest group of buyers ever to hit the market. And the idea is that there's this transfer of wealth, and that the millennials will finally cough up and come out and buy. And so the market's ready for them because it has a whole lot of inventory in their price point.
Just speaking from a millennial point of view, if you're dependent on an inheritance or a gift to purchase, wouldn't you say that's kind of an unhealthy market? Because how many families really have, let's just say, 500,000 at a minimum? Like if you're in Richmond, Vancouver, and you're moving from a townhouse to a house, you're looking at probably a minimum of $1 million, and that house probably needs some updates. So really, you're probably looking at $1.5 million to $1.7 million. You have some equity built up in your home, but really your total purchase price is going to be very close to that too, if not over $2 million. So you're looking at a mortgage of about 1 to 1.5, and then your monthly fee for that is about $6,000 to $8,000 a month.
Mm-hmm. Mm-hmm. But we see it all the time.
Just seems, well, I know you see it, and people
we see it
are
all
doing
the time.
it.
And we also see, Adam, that with the transfer of wealth, it doesn't mean someone actually has to die. It means that someone has to become generous towards their children. And we would, I think we all agree that most of our younger clients are getting some help from their family.
Correct. When I said inheritance, I didn't exclusively mean
I know, but
a death, a warm-handed inheritance.
I think that was the way. I think that was the, like when I was in my 20s, you weren't getting a lot of help. You were on your own. But it's a different world, and we have so much more equity and wealth in our properties if we live in this area, that we are in a position to take some of that equity and help our kids. Absolutely. We have to, or else they don't get to buy.
I think we had a podcast on this a few months ago.
Yes,
and I think
we
people
did.
should revert back to it. Something we never really brought up before was seller fatigue. And do you think sellers are getting tired of the showings, getting tired of cleaning their house, negotiating an offer, not having it work out, and then they're just willing to accept less, be more flexible? Talk to me about this seller fatigue phenomenon that we might be seeing right now.
Seller fatigue is real, and we can definitely see it within our business. And it's more of a factor of the market than it is to do with anything else. So we are pricing our listings sharply We are helping our sellers prepare with beautiful photography, things that are inviting buyers. We are getting the buyers in, and then we're getting these offers like Patty's talking about. These ones where they're trying for 100,000, 150,000, 200,000 under asking price, and the seller is just like, what is going on? But the interesting part, Adam, is sure, they have the option of having a price reduction or accepting these crazy offers, but our sellers are saying, we're going to take it off the market and then we'll talk again. So that's the reality of what our sellers seem to be doing right now, like this week.
And it's the idea of holding firm is one that, you know, I would even encourage, because I do believe there will be a shift in the buyer's mentality when they realize they've written 12 offers and they still don't have anything. Okay.
Yes.
Because they're shooting too low. But the other part of it is, and you people are too young to remember this, but me, I remember, a house takes 3 to 4 months to sell.
Yeah.
Not 3 or 4 days. And that's where we're at. And so we have to reset the expectation of the seller. Every evaluation that I'm sitting on right now, I'm explaining it is no longer that market. No matter how beautiful your home is or how well priced you are, and we have some beautiful, well priced listings, you're still going to sit for a while. And that, like, the other part is, so there's this expectation of the sellers that, or this belief of this on the seller's part that, oh my God, there's something wrong with my house. Why isn't it selling? And it's nothing to do with that. It's just a factor of time, and people are taking their time because they can. Jen, you know, you'll attest to this. You're out showing houses. You're showing 10 more than you normally would, right?
Absolutely, I am. Yes.
So it takes time. It takes time to go through them. And it's still, if you're well priced and you're ready to go and you've got the house looking the way it should, it's going to sell. It just takes more time. I said this 3 times this week. Oh, this is great. I'm getting all these terrible offers. That must mean right around the corner, everyone's going to sell. That's what that means to me, because people are writing, they're interested, they want to buy, and they will come to a more realistic opinion as time goes on.
I mean, I think the other thing to talk about is, and we have mentioned this before, but it's important to talk about again, is we are receiving more offers that contain subject to sale.
Yes.
And while those offers are valid offers, the real power in purchasing is when you have sold what you have. That is when you have this nimbleness, because if you come in well under asking with a subject to sale, why on earth would a seller consider that offer? They won't. And so buyers today need to understand, truly become buyers. Don't become a seller in the background and then you're going to offer to buy someone's property. You are not in a great position to offer what the seller wants, some certainty, etc. So while we were able to entertain subject to sales and there was still some activity that was allowing that in the market, I see that happening less, and I see subject to sales getting bumped because it is the buyer who is prepared in the background and has already sold that really has the power to buy.
Yeah,
strategy is important. Strategy is important. Let's move on to sales to active listing ratio. And for the entire market right now, the sales to active listing ratio is 11.3%. So that's pretty firm into a buyer's market. Detached reduced again. Detached is 8.5%. Townhouses 12.7 and condos are 13.3. So with an 11.3 sales to active listing ratio, are we about to see deeper price declines this fall? And I ask this question because a sales ratio below 11% has really only happened 3 times in about the last 25 years. It was 2019, there was a period there, 2012, there was a couple months there, and then 7 months in 2008 from August to December where the market, Patti, you just spoke about it earlier in the episode during the financial crisis there. So really 3 times in the last 25 years we've dipped this low. So how do we feel about pricing?
I think pricing is really specific in pockets. On our team, I do a lot of work, of course, in Richmond, but I do a lot of work, say, in Ladner and Tawasin and things like that. And I currently have a buyer who has an accepted offer in Ladner. And so when I went over the stats with them yesterday to see where we were, do you know that the sales ratio of attached properties in that pocket, so Ladner, is 25%?
Jeez.
Well, guess what? You're not in a buyer's market in an
You're not
attached property in Ladner.
No.
So even though the market is 11%, I think there's certain pockets, for example, like the Fraser Valley, like certain other areas, they're really bringing that number down. So it's really crucial that you speak with your realtor and you know what's going on in that pocket. And that's why we have, that subscription to that stats that really help us drill down and to know, well, wait a second, the news is telling me this, and this is what's happening. But hey, guys, here are the actual numbers for the month before.
Mm-hmm.
This is the
Mm-hmm.
market we're in. And that's why, when my buyer is saying to me, did we pay too much or did this or that happen? I said, well, let's take a look at the stats. We go through them and we see that we're in actually a seller's market.
And by the way, yesterday I did an evaluation of a single family home. And if you look at the last year, the sales have been almost a flat line for every month. It varies a tiny bit, but it's been a flat line. The inventory dipped down in December, as it always does, and then came back up. And again, it went down for detached homes from last month to this month. It's down. So, it's easy to get scared or overthink this stuff, but Jen's right. You have to go pocket by pocket and decide what's really going on by true facts, not conjecture or bad news that
that
being
big
drawn
it's not
in
a
to
big
see.
paintbrush.
Yeah, because stop watching it. Just live your life.
It's hard to teach
watch
the
our
market
podcast.
Live your life.
Live your life and watch our podcast. That's what you need for real estate info.
Yeah.
All right, guys, let's try and wrap this up with a few last comments. So we have the potential of another Bank of Canada rate cut. We still have high inventory. We have this new shadow inventory that's always been there, but now it's actually being talked about. We have somewhat unaccounted for kind of declining prices in certain pockets. Are we potentially entering a multi-year kind of buyer market? Like, where do we see the market going from here? Always the crystal ball question.
I don't think we're entering a multi-year buyer market. I think we're entering a multi-year balanced market where homes are taking longer to sell. Buyers are actually kind of like the sellers. The sellers take months and months and months to decide when they're going to sell. They don't wake up one morning and go, I'm going to sell today. They don't. They think about their financial position. They think about their family's needs. They think about the condition of their home. They do all this thinking. And it sometimes takes them even a year to put their house on the market. And guess what? Buyers can now, not on every property, because from time to time we are still seeing that really person who is targeted and swoops in and buys something. But on the whole, we can see this thing where buyers have that luxury, like the sellers have, to suddenly think, is this what I want? What's the condition? They get to really, really think about their choices and make a great decision.
Yeah.
Balanced.
There you go. Awesome. If you know of anybody that would benefit from this podcast, please send it over to them. If you have any questions yourself, reach out to anyone on the team. We'd love to chat. We have a great coffee shop across the street. Like and subscribe, and we'll see you next month.
Absolutely.
Thanks, Adam.